Hey everyone, and welcome to another quick take video tour. Today we are looking at JB Hi-Fi Limited. So JB Hi-Fi is basically an electronic store, Australian-based company that electronic home consumer products. So it's a very well-known kind of retailer in Australia. It does like consumer electronics, software, game, movies, all of that stuff. So it's something that today's world is, could be, if you do it well, you can make a lot of money because we're pretty much surrounded by electronics, and there's always the latest electronics craze. Anyway, so let's jump right into the ratios. Cool. P ratio looks good, fantastic. Going down to quick ratio, not a lot of cash. Current ratio, as expected. In some ways, because they actually would have a lot more. A lot more assets like inventory, like a harder asset, like games, movies, computers, and all of that. So what I expect to find in the balance sheet is the asset is quite high, but actually it's a lot of that is like inventories. Now, depending, because it's a retailer. So let's have a look at that. Firstly, let's stop by the. It pays a dividend, 3.72. Again, that's pretty good compared to any of the saving rates at any of the big banks in Australia. And we can have a look at the ASX just to confirm that this one is correct. 100% franking. Again, that's a good thing in Australia. All right, moving on to the cash flow statement. So I'm doing these one a little bit quicker just because I've been, my friend has been commenting that some of the videos is unnecessarily long. If you guys find that too, then just let me know. I'll talk a little bit quicker or jump through some of these stuff a little bit quicker too. Cool. Operating cash flow of, wow, fantastic, $600 million up. If it hits $1 billion, it's gonna be huge. All right, so let's have a look at investing. So it's investing some more cash. You kind of wonder what can a retailer invest in. Self checkout. What is it? Security system, better security systems and stuff like that. They can always invest in that. So there's always investments that you can do. The moment that you say like there's nothing else to invest in, it's there's nothing that I can do any better, then you're most likely either stagnating or going backwards, or the company is. I'm not saying you specifically. Cool. Financing, paying back debt, great. Buying back stock, interesting. And paying dividends, okay, not bad, looking good. And cash gone up, wow, look at that. So it's a lot of that cash is actually from operation. Good sign, looking good, really good so far. P ratio, paying dividends, operating activities gone up. It's fantastic. All right, let's have a look at the balance sheet. Current assets, so you can see, all right, let's go straight to inventory. There you go. Total inventory, huge compared to the amount of cash. And you got other assets. So it's a retailer, it's a physical brick and mortar store, so it's going to have stores and rents and overheads that they have to pay for. Goodwill, it's goodwill stay the same. If it's not going up, at least it's staying the same. Again, that's about reputation of the company, how well known and how recognizable the company is, like by the name alone. Current liabilities gone up, always not a desirable thing, but depending on how it's gone up, if are they borrowing money to invest in other things? If they are, then that's always a good thing, because sometimes you just need that advance in cash to actually do stuff, so then you can become better for the future, better prepared for the future. Cool. Total liabilities also gone up, but all in all, we can see that it's not looking too bad so far. All right, it's good. Let me just so cash and current liabilities, account payable. So yeah, that's where we get that 0.2, I think, on the quick ratio. Anyways, go straight to the income statement. All right, let's have a look. Yeah, one of the reasons why I looked at it, because it was in the advances. So I'm like, hey, gone up 3.8%. That's fantastic. And my brother actually works at JB Hifi, and that's, I can have some insight into what the company is like in terms of operation wise. Like, are they turning over staff a lot, or are they always busy? So again, let's go back to like having that insight into the industry or the company, or the industry the company is in. So then you have a better grasp of the entire company. Cool. Total revenue gone up. Oof. What's that? Is that 8 billion? Nearly $8 billion. It's fantastic. Okay, going straight down to net income. Net income's gone up again. Another fantastic looking number to see, or trend, is to see the net income going up. And yeah, no, it's looking really good. Let's just compare some of the other items. Revenue, because of the gross profit. Gross profit's definitely gone up. They don't do a lot of research and development just because they're really a retailer. It's about like how they can get the best deal from their manufacturers or the supplier, and then how can they incentivize people to shop at their store. So that's one of the things, or incentivize the staff to actually sell the products and make it attractive and to the consumers, so the consumer can come back. Not all consumers are price conscious. I think majority would be, but some people are not, and some of, like, let's say early adapters of like new technologies, they're not price conscious in any way. They just want the greatest and the latest, and they're willing to try pay more for more buggier technology. So that's the early adapters. And and then there's other people who are very focus on customer service. If you have great customer service, they're gonna come back, and that's one of the things. You got to define the segment of the market and the type of consumer you want to appeal to. So that's one of the things about being a retailer, or really being in business at all. So yes, so looking good. I'm really liking this company. So the question is, when to buy? Let's have a look. All right, so here is the chart. That's a daily chart of JB Hifi. So again, today is the 18th of January. It's gone up by 3.8%. 3.801%, 3.8%. So good. But you can see this really long, the high, and the high is so it's actually came down a little bit. So it opens, went high, went low. So it's already opened high from previous close, right? So it's the bears and the bulls trying to struggle the whole way through. The bulls initially won. If we even zoom in, maybe you could see what it looks like on maybe the 1 minute. 1 second is just too fine grain. We don't really need that. 1 minute. Ooh, 1 minute. Even 1 minute is too fine grain. Let's go 1 hour. All right. The 1 hour chart. Let's see, today, 18th. Here we go. So yeah, it opened quite high, went up and down, went up and down. Even let's go 15 minutes. Yeah, look. He's spiking volume. Yeah, on the 15 minutes again, keep it in perspective, and then it kind of flattened out. So the price pretty tight around that edge. So it's an initial jump that got it high. Now let's go back to the daily chart. So what does that mean? Well, look at this. What's this number? What's this here? Earnings standardized. All right, cool. I just need to move that away. No, it can't. It doesn't matter. Here we go. Look, the volume is higher than the average. This is a 10 units average, a 10 period average. So it's higher, but it's not that much higher. So I'm just thinking that maybe it's not being watched. Again, we're trying to play with the institutional player, and with that kind of small volume, I suspect the institutional players did not do anything to this price change, and for that reason, I'm not. I believe it's gonna come back down. It's always like a little recorrection, and we'll find out tomorrow. And it's hitting this all-time high, $52. So you can look at that. Look at that, friend. Whew, never been higher. Oh, I have been higher twice. So, so it's hitting this resistance, and I believe that's gonna come back. So let's have a look at the Fibonacci retracement. See what it looks like. So while I'm drawing this, I gotta say this one here is a really good looking company, and I would actually invest in the long term. You can see from the here, that's the net income. That's one of the things I love about TradingView. You can do so much with it. I got a free account, so you can only have 3 indicators on here. So, but that's okay. It's you can switch it in, switch it out. It's just like the monthly fee. The monthly subscription is a little bit expensive, especially when I'm not sure if I need it. Anyways, net income, and you can see it's just climbing. So they're doing something right. So that's fantastic. All right, let's move this over here. Let's have a look. So it seems like, wow, that looks so great. Look, it's been testing and retesting down here at the 78% mark. Now it hits up to the 100%. So the question is, will it go back down? Look, I say it might dip a little bit because it's already retesting this, and we have to watch. This may be a fake breakout. It's just there's not enough signal for me to actually say like, hey, it's gonna keep going up after this particular high jump, because now the signal for me is, let's say have the MACD down here, it's gone up, yeah, sure, great, but I don't see that volume. I don't see that spike in volume to say like, like there's a reason to accumulate it or even buy it at the moment. Maybe if you want to accumulate it, you can, but I would accumulate down here maybe. But yeah, it's not something right here, that's a sell. So no, I mean, if it retraces a little bit, and I would go probably, I'm saying I'll go, again, cash flow issues. I say maybe around $3,000 right here, and if it goes down to this point, and I doubt it will, I'm like 90% sure that it won't go down. Here, if it goes down to this point, I will put in 5,000. If it goes down to this point, I'm gonna be like, whoa, why is it going down so low? Are we expecting a massive drop in income? Probably, maybe, or it's just another crash. So you can see that if you bought it at this very low point, $20, you have triple your money. That's almost triple your money. This hasn't hit 600 yet. 60 yet. But yeah, so if it retraces down here, or maybe it shows a big spike in volume the next day, then I'll jump in at 2,000. So $3,000. So but I think tomorrow it will retraces back down. It's just testing this and see what's happening. Yeah, so the volume is kind of like getting lower and lower, and that's okay. So yes, so all right, the plan. I won't be buying it tomorrow unless there's a concrete signal that is going to keep going up. What I believe is going to happen is going to retrace a little bit. Let's have a look. Maybe let's have a look at this. Maybe it will retrace to this point here at the $50 mark, maybe $50 mark. I'll jump in again, but I need sufficient signal at that mark. I think it's let's pull up. I'm just gonna get rid of the MACD down here and put in a RSI, and let's see what it's gonna say. So RSI looks like it's gonna hit and oversold. This is a standard RSI on the close. So if it comes down a little bit, so then it's not saying it's being overbought, then I might jump in. If it's kind of look oversold, then I might jump in. So here's some indicators: retracement a little bit, spike in volume, retracement of the RSI and the MACD, kind of like do the curve again. So let's get rid of. So yeah, this is what I'm talking about when it comes to having a paid account. At least you have more than 3 indicators, otherwise you can't do it. But it's pretty quick to switch in and switch out. So I'm not particularly fussed. I'm not doing any high speed trading, so I don't really need moving average. Already got moving average. It's called MACD, isn't it? MACD. Let's mark that. Okay. Did it come up? No, it didn't come up. Indicator. MACD. Bring it in. EMA. What's going on here? Oh, let's get rid of this. That's because I already clicked the EMA again. All right, here we go. Yeah, so it's I feel like it's gonna do like a sell, kind of like they're gonna be a sell signal soon. So I'm just gonna wait for the next buy signal on the MACD, retracement of the RSI, relative strength index, and a spike in volume and a little bit of retracement on here. So we'll see what's happening. So what I would say is I would watch it very closely this week just to see how the retracement is going, or even if is it going to break through on that resistance. But even then, if it breaks through on the resistance, there's just not enough kind of evidence for me to see that's going to be a sustainable kind of breakthrough. So there's going to be some kind of retracement sometime soon. So, but overall, it's a fantastic looking company. Net income's up, dividend yield is reasonable. It's not the greatest, but it's reasonable. Again, it's better than keeping your money in the saving account. But yeah, everything looks great about this company. It's just like not a time to buy. All right. Anyways, that's pretty much it for today's quick take. If you like what you see or hear or watched, please give us a thumbs up, subscribe, and leave a comment on anything you want to add, or correct me if I'm wrong about anything. Your own trading strategy, or what company you would like me to do a quick take video on. And again, keep it civil and don't start shit down there. And that's pretty much it. Thank you so much for watching. I hope you have a great day trading ahead. Take care.